For 50 years, oil meant dollars. That rule just broke. A tanker crossed Hormuz, selling crude in Chinese yuan, and another followed. This might be the first step toward a world where America loses financial control. It all started in March 15, 2026. A Pakistani-owned supertanker named Karachi slices through the Strait of Hormuz, not with oil priced in dollars, but in Chinese yuan. Hours later, another vessel follows the exact same route, same currency. For the first time in half a century, the world's most vital energy choke point just processed crude outside America's financial orbit. And that single moment, it's not just a news blip, it's the first visible fracture in the invisible deal that has quietly bankrolled American power for decades. Let's rewind and see exactly how we got here. It all started with black gold. Back in 1932, drillers struck oil in Bahrain. Within years, the entire Persian Gulf lit up with discoveries. What were once sleepy desert trading posts exploded into modern marvels. Dubai went from fishing boats to glittering skyscrapers in one generation. Riyadh, Abu Dhabi, Doha, they all transformed almost overnight. But this wasn't just about money. It reshaped entire societies. Oil wealth flowed straight into the hands of the state. Governments used it to build everything. Free healthcare, subsidized housing, lavish infrastructure. In return, citizens stayed loyal. Prosperity for obedience. No elections needed. As long as the oil money kept flowing and the streets stayed calm, the system worked perfectly. By the 1970s, those 6 Gulf monarchies held the keys to the global economy, and they were about to use them. Flashback to October 1973, war erupts between Israel and its Arab neighbors. The United States backs Israel. In retaliation, the Gulf states, led by Saudi Arabia, turn off the oil taps to the west. Prices skyrocket from $3 a barrel to $10 in weeks. Gas lines stretch for miles in America. Inflation explodes. The West learns a brutal lesson. Whoever controls the oil controls the world's heartbeat. Richard Nixon's administration gets the message loud and clear. Quiet negotiations begin. By 1975, a historic handshake seals the deal. Saudi Arabia agrees to price all its oil and urge the rest of OPEC to follow, exclusively in US dollars. In exchange, America promises ironclad military protection and the latest weapons. That quiet agreement became the petrodollar system, and it quietly remade the planet. Here's how it worked in practice. Say Japan wants Saudi oil. Japan can't just pay in yen. First it sells yen for dollars, then it buys the oil. Every single barrel of Gulf crude, roughly 1/3 of the world's daily supply, forces the rest of the planet to keep a stockpile of dollars, trillions of them, circulate every year. That constant global demand for dollars lets America run massive trade deficits year after year, over $900 billion in 2025 alone. Instead of sending real goods back, the US simply prints treasury bonds. Gulf oil money flows right back into American markets, keeping borrowing costs low and living standards high. Meanwhile, the Gulf states got what they wanted most: security in one of the most dangerous neighborhoods on Earth. Their sovereign wealth funds now manage trillions, much of it parked in US stocks, bonds, and real estate. They built airlines, tourism empires, and futuristic cities on that stability. For 50 years, both sides held up their end of the bargain until February 28, 2026. That's the day the United States and Israel launched surprise strikes deep inside Iran, eliminating the supreme leader and igniting a new regional war. Iran, bleeding and cornered, strikes back hard, not just at American bases, but at the Gulf states themselves. Missiles rain down on civilian areas, and military installations across Saudi Arabia, the UAE, Kuwait, Qatar, and Bahrain. The world's largest oil refinery goes dark. The biggest gas facility shuts down. In total, the 6 Gulf nations slash output by a staggering 6.7 million barrels per day. That's roughly $1 billion in lost revenue every single day. The Strait of Hormuz, the narrow passage that carries 1/5 of all global oil, turns into a shooting gallery. Hundreds of ships sit stranded, too terrified to move. Then comes March 15th. The Karachi tanker and its yuan-priced cargo sail through anyway. Another vessel follows. Suddenly, the old rules are bending in public. The Gulf leaders never asked for this war. They had warned Washington right up until the strikes began. Now they're paying the price in blood and treasure, while America's promised protection feels increasingly hollow. Remember 2019? Iranian drones smashed Saudi oil facilities and knocked out 5% of global supply. The US response? Crickets. This time feels even worse. Qatar's Patriot missile stockpiles were reportedly down to days, yet restocking help never came. These aren't weak countries begging for scraps. They control more than half the planet's proven oil reserves. They can turn the spigot on or off and send energy prices and global inflation wherever they choose. If they ever decide America is no longer the reliable partner, they have options. And those options are already appearing. China has been courting the Gulf for years. It's now Saudi Arabia's biggest trading partner. Currency swap deals let Riyadh and Beijing trade directly in yuan and rial, bypassing the dollar entirely. China sells advanced weapons with no human rights lectures attached. No dragged into wars, just straight business. The Gulf states have spent decades diversifying. Vision 2030 in Saudi Arabia. As a finance and innovation hub, tourism alone now makes up about 12% of Saudi GDP. Their airports are the busiest on Earth. Their money is everywhere. But all of that glamour rests on one thing: the perception of safety and predictability. That perception just took a massive hit. So what happens next? Not an overnight collapse. The global financial system is too big, too sticky for that. But a slow, steady erosion. Exactly what we're seeing right now. Gulf sovereign wealth funds are quietly shifting billions toward Asia. Defense ties with China are deepening. Investment pledges in America are being reviewed. One prominent Dubai billionaire publicly questioned why the Gulf should suffer for a conflict nobody wanted, then quickly deleted the post. The frustration is real, and it's barely being hidden. America today is far less dependent on Gulf oil than in 1973. We're a net exporter now. But the dollar's supremacy still rests on that half-century-old promise: oil for dollars, dollars for protection. When that protection falters, the whole foundation wobbles. We're watching the beginning of a rebalancing, not with explosions or embargoes, but with quiet portfolio shifts, new currency experiments, and fading trust. The era when a handful of desert kingdoms quietly propped up the world's superpower may be slowly drawing to a close. And the question everyone in Washington should be asking right now is simple: what does America look like when the petrodollar stops working its quiet magic? Because the tankers are already sailing through in yuan. History shows, once the old rules start bending, they rarely snap back the same way again.